today, I'm going to start off with the Japanese yen. I marked this high from a long time ago. This high is actually marked by July 3rd, 2024. That was the most previous all-time high. As time went on, the Japanese bank managed to suppress continued inflation throughout the years, maintaining itself below that all-time high. And in fact, earlier this year, we came up. I'm going through this in fast motion. Here's December 2025, and then we came back up. Oh, there's a little bit more of a drip. But then here is where this trend really took off and brought us close to that all-time high. There's that white line. Really close. May 2026 really consolidated for most of this period of time, and then tempted it again on June 22nd. Tempted that all-time high. But then, yesterday, after we were done with market analysis, at 6 o'clock, we broke out above that all-time high. And we haven't really looked back. I mean, there was a period of time here where you can see that this spike occurred, and then consolidation for a little while. And then that all-time high got beat again. So we created an all-time high, and then it got pressed up again. And as soon as it beat that high, it came back, right back to touch that top side of that all-time high. So what happened? Well, inflation took off. There was no stopping it. And so what the Bank of Japan did here at 2100, so this was at 9:25 last night, they boosted the interest rates. They were like, oh, we can fix this. And they boosted the interest rates. It barely had an effect. Then they did it again. They boosted the interest rates here. And it managed to come down, and this is all, keep in mind, this is a 5-minute chart. So within 5 minutes, the Japanese yen managed to gain 0.28% and then lose it again within 5 minutes. And now we are full on exploding upwards. This is the beginning of the unraveling. We wanted to watch this. I wanted to watch this currency specifically because of the fragility of the Asian markets when it comes to energy. Energy consumption is expected to go up a considerable amount. In fact, they anticipate that 6% of all energy by the end of next year, 6% of all energy is going to be dedicated to AI. So, there we have it. Japanese yen now in uncharted territory, never having been this inflated. Where will it go? Who knows? But this is the beginning of the unraveling, as it were. The wagon, the rickety wagon, has been going down the hill at uncontrollable speeds for quite some time. I would call this the first wheel that's popped off. Had to bring that first up. Even though oil is still below where the war started. even though the Asian markets are only consolidating underneath the all-time high. Look at that. The previous high is right here. We've just retested it. So no crash, but the currency is unwound. So we'll get to watch this play out in slow motion. US market still doing great. We got to do recalculation on its value in accordance to gold and silver. So we take the US 30. Divide that by gold. And now it's 13. Woo, 881, 882, it's 81.9. Silver prices underneath that major volume zone. We did come down and almost test the previous highs, that double top that we saw before the big run there at the end of 2025. Gold prices also maintaining itself below that long-term trend line. Gold-silver ratio still climbing upwards. Bitcoin dominance still dropping. Altcoins showing some weakness over the last week, but not to the same degree that we're seeing the weakness in Bitcoin. Where is the money going? Where is the money going? It's going into the next set of investment. The big companies, they've all been experiencing a little bit of a downward trend over the last month or so. And this is because we've recognized, we can see these patterns occur. The money went into SpaceX. A lot of the institutional money quickly went into SpaceX. We talked about this earlier. That money was withdrawn. Prices came right back again. Market capitalization dropped. Put towards video production. But that the money that went into SpaceX, that liquidity came from the Palantirs, the Oracles, the Nvidias, the Googles. Look at how they all trend downwards during the time where SpaceX took off. It's estimated $500 billion were put into, taken out of these things and put into SpaceX to make videos. Just to highlight the fabrications that we're seeing. And of course, the US dollar showing strength. So where is this headed? Well, as everybody is very clear with my my sentiments. In order for this to be maintained, in order for the charade to be perpetuated, people need to be put into a state of fear. And so I believe that the crisis that we see coming forward is going to be so fabricated, and yet at the same time so believable. I wonder what's coming up this fall. Oh yeah, aliens. Disclosure. Makes sense. The timing is perfect. And I think that the aliens are going to be attributed with the capacity to render our technology obsolete. And we're going to have to go to war. Might not be right away. Yeah, that's one thing. It might not be right away. They might hold on to that narrative about the aliens being an unknown for a while. But that the programming language that Trump had in his first term, build the wall, that programming language will be leveraged again. And this time it's going to have to be a wall around AI, I think. The companies that are invested in this technology cannot afford to lose that money. They are investing in it because they want the domination, they want that control. They will not go down without a fight. And they will make a fight if they have to. You know, we take a look at what Elon Musk did this last week, with that movie, Citizen Vigilante. He didn't have to post that. It was a C-budget movie. It had no chance of becoming a box office hit. It was banned in Europe. Elon putting it up on X for free gave it 24 million views in 24 hours. And I believe that video, as you know, Wayne and I were just talking about this earlier today. You know, if that movie would have come out back in 2014, 15, back when the migrant crisis actually started, we probably would have been like, yeah, we need this movie. We need this movie to go viral. But the fact that it's here now, so far after the fact, after the crisis is long past, people think that the crisis is going on right now, but that's because they weren't paying attention. In fact, most of them just called us conspiracy theorists back then. But that today, coming out with a video that promotes violence against Islam, they need this war. They need the fight. They need there to be civil unrest. They need it to be destabilized. They need society destabilized so that they can be called upon to bring order. These guys. But that's okay. We're also recognizing how history repeats itself. And one of the things we talked about yesterday was the pattern that Bitcoin is showing. Where about 1,060 days or so we have a bull run, and then for 366 days we have a retracement. And we are currently approximately 264 days into this. So we got about 100 more days of retracement. If we follow the pattern, we got about 100 more days of retracement before we have another 1,060 days of growth.
So October-ish, if the pattern holds.
October 3rd is 366 days. And traditionally, when we look at whenever there has been a good run, let's see here. There's January. What do they call that? Here we go. So this big bubble here towards the end of this rebuild. So there was a recovery that led us into November. So October ended up bringing things back into recovery. After October was the big run. But now, here's the thing. We have yet to go through recovery. And recovery took 718 days in that instance. In this case here, recovery took 770 days. So when October starts, yes, I think that that'll be the bottom. And it may take us, very well, may take us 700 days or so to get back to that all-time high. Again, that's if we look at the patterns. And who knows? Maybe because we're looking at the patterns this way and we're calling it out and putting it up on YouTube, that now they'll do something else. Who knows? But that is a pattern. ADA finding again new lows here over the last week. Let's go back to the logarithmic chart here. So where does this take us? On the daily chart, we are simply moving C down further. Oops. No, let's move that out of the way. Ethereum also hitting some lows here. But really only testing C. Oh, wait a minute. That's on that chart. Yeah, so really still in consolidation between B and C still. Midnight. I'm going to zoom in on the hourly chart just so we can see the detail. Consolidating ever since June, well, May 26th. End of May to the beginning of June, we've been consolidating since on the lower end of that range, sitting now at 3.1 cents. XRP also tempting some new lows here. BitTensor not creating new lows, consolidating around this $200 range. Fetch AI also consolidating. It did tempt going above that trend line, but it was denied right away. Polygon at all-time lows, just under 7 cents. Desync also all-time lows, just under half a cent. Clearpool, oh my goodness, what an opportunity. Clearpool at all-time lows, bouncing off of 2 cents. Oh, under 2 cents. Superverse also now at all-time lows, I think. Oh, nope, not all-time lows, but tempting them. NPC and SPX Conversely, NPC is continuing its downward trend, but SPX has actually been seeing a reversal since February. They are creating higher lows and higher highs. I went through these pretty fast, and the reason why is because I would like to go through what's going on. This was actually written by Dario on the 23rd of June. Japanese yen on the brink of imploding. While everyone's attention is polarized by anything involving the peace negotiations between Iran and the US, negotiations that, to be fair, have been more like, these are my requests, take it or leave it from Iran, and okay, we take it from the US. And JPY has been slowly but inexorably continuing to depreciate. Inexorably, thank you. Continuing to depreciate. With USD JPY trading at 161.55 as I write, that was still underneath that all-time high. This, despite the Japanese government intervening twice on Monday during U.S. trading hours as soon as the Forex rate broke 161.90 after an emergency call to coordinate with the U.S. Treasury. And if you ignore the fact that JPY is trading at its weakest level of the past 40 years, and that the Bank of Japan just hiked rates to 1%, the highest since 1995, then everything is fine. If instead you consider that over $2 trillion equivalent of leverage in the global markets come from the JPY carry trade, that the Bank of Japan is moving like a snail to hike rates, and that Japan imports 100% of its crude oil, then you get goosebumps. Everyone thinks that even if oil prices stay where it's at, oil just got more expensive because it takes more currency to get it. Everyone thinks that if any fireworks are lit up, it'll be in the Middle East. But what if the fireworks show starts in the complete opposite direction, taking everyone else by surprise? For years, I've been repeating that Japan is trapped in a monetary doom loop, and I even wrote a couple of articles on the matter explaining it extensively if you have time to check them out. In a nutshell, while the Bank of Japan continues to print money, for your information, they never stopped quantitative easing, they just slowed it down a tad, to manage Japan's massive debt, rising rates actually devalue the JPY because more money printing is required to cover the higher interest prepayments. So, they raised the rates, but now they got to print more money to pay for the rates. That devaluation forces investors in the massive JPY carry trade to post more collateral on their swaps, which in turn forces them to borrow even more yen to acquire collateral to cover the losses. See the snowball effect?
Catch-22.
Yeah. What do you do when the trade runs away on your... Oh, just put more money in. Just keep putting more money in. Just keep going. Don't worry. It'll eventually retrace. Keep putting the money in. Once this self-reinforcing cycle maxes out, Japan will be flooded with liquidity coming back home, while foreign assets will be dumped or fire sold in case of stress to repay the debts. Another important factor I keep stressing is that while people think Japan can sit comfortably on its pile of U.S. treasuries and foreign reserves, still the largest in the world, in reality it's thanks to those reserves that the JPY still has some value for international investors. Here, the math is simple. If the Bank of Japan continues to print the yen and Japan's foreign reserves don't increase, the ratio between them is going to rise, translating into more devaluing pressure on the currency. Some people tried to argue that the Japanese economy, after decades of stagnation, is growing again thanks to years of Abenomics and the series of stimulative policies that followed. Here is the mistake. Confusing nominal growth in JPY with growth against the international yardstick, the USD. Because they're saying, oh, look, things are getting better. Markets are going up. But they're forgetting that they have to look at how it compares to the international markets, simply because they have to import all the energy. As you can see in the chart below, in US terms, Japanese gross domestic product measured in USD is currently roughly the same as in 1992. That's where we're at today. So it's declined considerable amounts in the last little while. From 2012, retracing back to 1992 levels. Does it still sound surprising that the yen is currently trading at its weakest value compared to the US dollar over the past 40 years? Furthermore, the Japanese economy has been growing nominally in yen. However, if you calculate the real level of inflation in the economy rather than the officially ridiculous one published by the government, governments are famous for that. So, oh, inflation, we were able to keep it under 2% when in fact it was closer to 8%. They can get away with that because they can just lie. They just, oh, look at the balance sheet. Look at how good it is.
Well, they don't include everything, and they say they don't, and people don't question it.
Right. Yeah.
Right? We don't include energy, and we don't include food. It's like, yeah. Wow, okay, well, those are important things.
Yeah. Yeah. Japan has been in recession since 2020. Remember how we were talking about how the gold prices, like right now we're seeing it get more expensive in gold. But that overall, since COVID, we're still in recession. The markets, as high as they are, still have gone down in value in comparison to gold and silver. Now, what happens if Japan sells its foreign reserves to strengthen the yen? And as I've been saying for years and proven right every single time, any Japanese foreign exchange intervention is completely futile at sustainably strengthening the currency. Why? Because the government is effectively selling the same assets that are serving as collateral for the value of the yen. The currency that continues to increase in supply because of the Bank of Japan's quantitative easing infinity and ballooning government debt that's currently at 236% of its GDP. So they have 236, so over 2 times the debt. Sorry, their debt is at over 2 times the value of the amount of money that Japan makes. A figure even greater than that of already broken countries like Venezuela. Consequently, any yen intervention is exit liquidity for all those investors looking to de-risk from the yen, which is why it never took too long before the currency weakened back to the level it was trading at before the government intervention. If you think the Nikkei breaking all-time highs day after day compensates for all this economic nightmare Japan is falling into, let me share with you the index of the Venezuelan Caracas Stock Exchange. 2017, 2018, 2020. This is the stock exchange. Of course, the Venezuelan market is a far cry from the Japanese one. And nevertheless, do you see any similarity with the Nikkei by chance? What is that, the same time frame? No, not quite. 2 years ago, I warned how in the long term it was inevitable for the Japanese yen to weaken past 300 compared to the USD. And now we're getting very close to the next stage of sharp devaluation that can potentially weaken the yen. Oh, look at that. I apologize, folks. We are not an all-time high. And when we go to the monthly chart on the yen, we can see that we actually have yet to go to all-time highs. But this was before. This was 85 when it was higher. We are now getting very close to the next stage of sharp devaluation that can potentially weaken the yen past 175, especially if I'm right, and the upcoming oil price shock is going to throw gasoline onto this fire. Next stop after that is 200. Now, if the yen loses 40% of its value against the US dollar and oil goes back up, which it will, why? Because remember, the Strait of Hormuz, after the Israel didn't honor the ceasefire, Iran said, fine, we're closing the strait again. That on the price of oil, what we're seeing right now, this is zooming out. You can see the effects of what the war did. Going up, coming right back down again. The long-term effect, the more that is suppressed, the more the energy buildup expands. The rise, the spike, I mean, there are entire oil fields that have been shut down in Iran because they weren't shipping it out. They couldn't produce, so they had to shut down some of their plants. Well, their plants are still shut down, and they're going to take 6 months to get back up and running again. So before the oil flows through, like a new, fresh oil that flows through the Strait of Hormuz, it's going to be a while. Because it takes months to turn plants back on again. When they're shut down for months. So what we see right now is just that investor impression that things are going better now because the war is, oh yeah, no, things are much better in the Middle East. Much better. The mainstream media never tells you the whole story. And coming back to rest at previous highs, yeah, we might see it come down and maybe find this, this level here. Let's get another line out. We might see it come back and test these levels here because that was a previous resistance. At the same time, we're already at this resistance here. When this takes off, like think about it. If this just goes back up to here, just to these levels, if the oil only goes back up to here, that's a 15% increase. A 15% increase for Japan. And their currency is inflating. So their inflation is going to work against them exponentially. Hey, Gary. But these oil prices, that's not going to just end there. With the oil shortages, some people are saying we got about a month left. Now, if they've said that before, but that we got about a month left before oil prices are going to have to go back up again simply because the supplies are going down. We're consuming oil faster than what the market is than what's being released on the market. That's the danger for the yen. The market loves to stare at the obvious fires because they make for great headlines, but the slow structural accidents are the ones that wipe out portfolios. Not because they're more dramatic, but because they're easy to ignore until it's too late. Japan is still stuck in the same loop. A debt load that cannot tolerate materially higher rates. A central bank that must keep manufacturing liquidity to keep the system upright, and a currency that pays the price for that choice. So they're in that snowball right now. That's why the yen is now unraveling beyond those all-time highs. Let's zoom in. This is the previous all-time high, and this was yesterday at 10 minutes to 7 p.m. our time. So the Japanese yen is now unraveling, and it's only because the can has to be kicked down the road. The weaker the yen gets, the more inflation Japan imports through energy and commodities. The more inflation it imports, the more pressure there is to normalize the policies. Yet, the more it tries to normalize, the more the debt math deteriorates and the more the market starts anticipating the next wave of printing. At the same time, carry trade is not some niche strategy. It's a pillar of global coverage. Or global leverage and risk appetite. Audrey Lynn, I'm just going to mute your mic there because there's some feedback coming through. Once the move becomes disorderly, the global and risk appetite. As long as the yen is a cheap funding currency, investors will keep using it to buy everything else. But once the move becomes disorderly, the direction of capital flows reverses. Collateral calls do not care about narratives. They trigger forced deleveraging, and forced deleveraging does not stop at the border of Japan. It spills into everything from equities to credit to government bonds, anything that was purchased with borrowed stability. So what he's saying there is, yeah, there's an advantage to the yen going down in value because it means you can buy more of it. Right? So it's like people are looking at this as the yen's going on sale. But in the long run, that's detrimental. The popular assumption is that Japan can always defend the currency with reserves. The uncomfortable reality is that using reserves is like selling the last fire extinguisher to buy a few more minutes of oxygen. So the question is not whether the yen can print 175 or 200. The question is what breaks first? The market's willingness to fund the trade, the credibility of the policy framework, or the assumption that the next shock must come from the Middle East because that's where everyone's looking right now. The most dangerous risks are the ones that feel boring until suddenly they're not. If the next volatility event is driven by Japan, it will not arrive with a warning siren. It'll arrive as a gap, a scramble for collateral, and a global sell-off that looks irrational only to those who forgot where the leverage was funded. That's why this matters. Not because Japan is about to explode tomorrow, but because the fuse is burning and most people are watching a different fireworks show. Bank of Japan, everyone. That was market analysis for today. We talked about the water yesterday. We talked about the meme coin. talked about the futility of the AI data centers. There are now 6,000, by the way, in North America. 6,000. And apparently, our population over here is less than half of the population that's in China. So it would make sense that if North America needs 6,000 data centers, that China would probably need 12,000. China has less than 300. And they're not building more. So one of the conversations that we had on Sunday was, well, why do you think that they're building so many? And, I've shared that they have the intention of decrypting the data. And I think that that's the case. I think that they do want to do that. But we also have to remember that we're going into a cyber war, a chip war. And in war, whenever there's a war, it is an offloading of old technology. Whenever we see bombs being thrown at each other and we look at the little lights on our phones and our desktops and our TVs and we see the bombs going off, automatically people think, oh, that's next level destruction. When in fact, what we're normally seeing is the offloading of old tech. These munitions, they're not as dangerous as what we have now. We can get rid of them and we'll just go and carpet bomb some place we don't like. Neighbors, usually. So when we're going into the chip war, or the computing war, it only makes sense that they're going to want to consume as much resources as possible into old tech. I've been talking about how new chips are being developed. In fact, Taiwan, where most of the global production for computer chips are, they are walking away from entire manufacturing facilities, building brand new ones, because the very infrastructure needed to produce the new chips doesn't even look like the old infrastructure to produce the old chips. And so what I believe we're seeing is the grand theft of all of the wealth within America to build the data centers and get people to buy water coins, meme coins for water. Gary, to clarify, 6,000 data centers in North America, so both the US and Canada. And China has less than 300 and they're not building more. So, 1/20th? China has 1/20th the data centers that America is building. And again, I think it's because they are wanting to just spend the people's money on old tech. And they got to make it look like they're doing something. And so they come up with language patterns that say things like, oh, China's models are a threat to security. Like what happened last week, or no, that's 2 weeks now, where Anthropic, American company, launches Fable, the new model, and it gets shut down within 24 hours. Why? Because a bunch of people got together and took open source Chinese models, and they started sessions asking Fable how it was built. And those Chinese models took the answers and built a new model that was just as good as Fable. And with Fable, most people, if you're using Fable, you're probably spending $200 a month. Well, an open source model like GLM 5.2 is the new benchmark one for the open source Chinese models. It is now capable of doing the same thing that Fable was. The benchmarks have been evened out. This is the same strategy that China used back in this area here in February. When was that? Nah, that was back over here. February 2025. Right after Trump came into office, he talked about the tariffs. And the tariffs, they put a damper on the economy. People didn't want to invest. Why? Because things were getting more expensive in America. Why? Because he kept on he put tariffs on the products to try to reduce the incentive to buy Chinese products. So China responded by telling all of their dropshipping companies, hey, market directly to Americans and sell it to them right direct. They don't have to pay the tariffs that way. They only have to pay the tariffs if the product is bought in America. So then all the people started shopping online and ordering things directly from China because they didn't want to see the tariffs. China played it very smart. Well, they're doing it again. They're saying, hey, folks, you guys are having all these data centers built. You know, all that surveillance that you don't want is all built by your subscriptions to those frontier models. You know, you don't have to do that. You can actually get these cheap models. You can get them open source. You can download them directly. Some of them you can run on your own personal computer. Some of them you got to get a more robust infrastructure. Once you start getting into the hundreds of billions of parameters, you got to get bigger machines to do it. But you don't have to subscribe. In fact, the amount of money that you need to spend on a server, you can rent a server for cheaper than the Frontier model subscription. So the Frontier model subscription, that's a centralized server. They've got control of all that data, and you're paying them monthly to rent the data. Whereas you can rent a server, and now you own the data. And the cost of renting that server is less than the cost of renting the data from the Frontier models. So China is playing it very smart. They're saying, you know, you don't have to give your money to the Oracles and the ChatGPTs and the Anthropics and the Groks. You don't have to give your money to them. You can do the same thing with open source models. And so that's leveling the playing field. What does that mean? In the long run, the open source models are hands down winning the AI race. As a result, because it's America, it's just the way the Americans think, it's a mentality that they have, it's a certain paradigm they have, that they have to be the biggest and the best. And so that paradigm is driving these companies to the brink of war because they need the war to get the people to be on board. Why do you think, like AI, these data centers, they don't need water? They're saying AI is the thirstiest machine ever built. It's false. It's fake news. First of all, you can circulate the water. You don't need fresh water. You can just recirculate it. You can use gray water if you want. It's just water. You just need to cool the chips, that's all. They're saying they need fresh water. And that, you know, every time, look at this, how the language patterns are. A single conversation with ChatGPT evaporates a water bottle. Training ChatGPT 5 drained a small lake. None of it's true, but they've got the programming language to get people to believe it. And because people believe it, you got people like Burry, Gates, and BlackRock, right there, proudly displayed on Trump's website. This is Trump's website, by the way.
So is it safe to say that this meme coin is going to contribute to global climate change?
Yeah. Yeah, probably. Or it's kind of like the joke that we had there yesterday. So glad that we were trained not to use single use plastics back in 2020. Really glad that we got trained up on how to do that, because otherwise, how else would the data centers be able to be built? Yeah, this is going to be. Well, I think this what we're going to see is this wealth transfer going to. People are just so gullible that I think the masses are going to go towards this. There's going to be people who see it for the fraud that it is, but they're not going to know. They're not going to know what the solution is. Next gen merchants, though, we know the solution. Privatize your data, take self responsibility over your equity, and tell the rest of the people to continue doing what they're doing. We are positioning ourselves at this time to be leaders when all of this fades away. And this will fade away. Why? Because the technology is archaic. It's archaic. You think that China's going to stop doing its business strategy? No. In fact, there's already groups gotten together, DAOs, decentralized autonomous organizations. They've already gotten together to create open source plans that you will be able to use in 3D printers that haven't even been invented yet. Those 3D printers are going to be leveraging nanotechnology, which is the idea that we have 3D printers that can take filament and make toys and shapes, and there's people making tools out of 3D printers, but that's still at a filament level. But nanotechnology is going to allow us to print at the molecular level. So now you can go ahead and print your own computer chip in your garage. Oh, and if that's not something that you have an affinity towards, that's okay. These printers are going to be like $5,000. So someone in your community is going to have one. Why? Because they can just print computer chips that are 200 times more efficient than the old computer chips. There's open source communities already building plans for the technology that isn't even in existence yet to accommodate the scaling of technology. This is going to fade away. It'll be just another rug pull, like every other meme coin out there. How do I know that? Because it's on Solana. That's why. It's literally right there. President Trump signs the Strategic Water Reserve Framework, and it's in effect. Originally scheduled June 19th, rescheduled to allow full national focus following the Iran peace agreement. No, it wasn't rescheduled, to allow full national focus. It was rescheduled because June 19th doesn't have as much significance as July 4th, Independence Day. That's the day that this goes live, that this whole thing. You can go and get the coin now, but it's not traded on the exchanges yet. July 4th, folks.
Honestly, they should launch it September 11th.
Right? Here's the contract address, by the way, if you want to go and check it out. They got it right there on the home page, telling you exactly how they're going to scam you. Hilarious. That's all I got for market analysis today. Any questions?
Yes.
Yeah.
Okay. Why we're a tenth of the population of China or less, and we got 6,000 AI data centers in America, and 10 times more. No, more than 10 times more than China.
Yeah, 20 times the data centers that China has. And those data centers that we're building, they're bigger. They're called hyperscalers. They're way bigger. There's one of them in Ohio. The footprint is bigger than Manhattan. The one building. It's so astronomically large. And again, like, it's only because this is following the patterns of war. They're just trying to extract the wealth from the people, getting them to believe in the American way of doing things. Elon was already saying that if you're not going to invest in SpaceX, you're not patriotic. Like, it's just ridiculous. Continue with your question.
So you're saying the large amount of data centers is just to picture a front to make Americans think that we've got the power with AI data centers?
Yep. It's all a charade. God, I'm reminded of the story of the Borgias when they were in control of the papacy. This was like 1400s. The French, they actually had the capacity of obliterating castle walls, armies. They could take out swaths of armies with cannons. It was the newest technology, and the French had it. They had these cannons, and they could level. They could roll wherever they wanted and just destroy whatever they wanted. And the Borgias ended up in Rome. They ended up hiring an artist to make cannons out of potter's clay. And they put the cannons on the walls of Rome. And when the French came, they saw the cannons and turned away. The data centers are useless, they're archaic, they're outdated, and they're going to be absolutely categorically irrelevant within 5 years. They're not going to have any use. They're going to be, I honestly think what should happen is that after those data centers become obsolete, is that the people take them over and they build vertical gardens. Because they're the perfect environment just to build gardens out of all of them. And if not, man, make yourself a really good paintball course or something like that. You know, go have some fun playing paintball, or turn it into a trampoline gym or something, right? But they're going to be wonderful infrastructure. The shell itself, the building itself, is going to last a long time, I'm sure. But you won't need to use them for data centers.
Yeah, crazy.
Smoke and mirrors.
Kate, I gotta go get to work.
Okay.
We'll see you tomorrow night.
Yeah, have a good one. Take care.
I've got to talk